Hello and welcome. I'm Charles Aite. The Cedi is now the worst performing currency on the African continent with only 2 months into this year. This is because it has depreciated by about 7.6% to the dollar, overtaking the Zambian kwacha with 2 weeks ago, which was 2 weeks ago, and of course was remaining the worst performing currency on the continent. Charles Nixon-Yeboah looks at the League of African Currencies and has more in this report.
Both Ghana and Zambia have challenges in addressing their escalating debts as well as struggling with revenue mobilization and expenditure management. This conundrum is impacting negatively on the country's exchange rate, interest rate and inflation. Additionally, the recent downgrade of the country's ability to borrow is also a major worry as investors are still unsure about the outlook of the Ghanaian economy. This affirms some economists and analysts' assertion that all concerns regarding the electronic transaction levy must be addressed and passed immediately by Parliament. If not, the depreciating Cedi will nullify the budget of most corporate institutions as well as reduce the disposable income of consumers. But there could be some hope going forward as the World Bank Group has approved a 5-year country partnership framework for Ghana from this year till 2025. This will see the injection of $4.5 billion into the economy in the next 5 years. Meanwhile, the Namibian dollar overtook the South African rand as the best performing currency in Africa so far, with an appreciation of 4.12% to the dollar. The South African rand is second, also with an appreciation of 3.68% to the dollar.
Quite disturbing there, but we'll engage an analyst on this. But before then, here are some infographics for your consumption. Of course, you could see the fact that in this particular infographics on your screen, Ghana's Cedi ranks last, among the performing cities in the African continent. We could see the very best performing city being the Angolan Kwanza, which ranked first with a percentage of 12.26. The South African rand followed second. The Guinean franc was third. The Nigerian naira was also fourth in that regard. Now, this is where the story is. The Ghana Cedi, tailing behind major currencies in Africa to rank 16th, among the worst, performing currencies in the sub-region, the continent actually, with the Gambian Dalasi being the 9th. Well, let's dwell on this worrying development a bit because we're joined by the Executive Director of the Center for Economics and Inequality Studies, Dr. Benjamin Amwa. Doc, we're grateful that you could join us. What exactly is going wrong with the Cedi?
Having me, I must say that the Cedi's performance, particularly for the first 2 months, has been a bit of a shock for us because although we anticipated that 2022 would be a difficult year for the Ghana Cedi, we never thought that it would come this quick. What is happening to the Ghana Cedi is simply as a result of the nature of the current condition of the economy. If you have observed from last year, especially last quarter last year, the governor of the Bank of Ghana made some statement at, I think, an annual banking dinner somewhere last year. And if you read his report, and you analyze the report, the statement that he made in there shows that the economy really was having some difficulties. That information is public, and I will encourage your listeners and readers to have a look at that particular information and see what is in there. So that is one. Two is also the fact that our commentators, especially those who matter as far as our public financial management is concerned, have also not been able to help us to push across confidence in the Ghana Cedi. I'm saying this in particular reference to the statement that was made by the Minister of Finance in Koforidua concerning the need that we have to pass the e-levy. If not, the economy will be in shambles. He was being truthful, but then if you want to rally around confidence, you don't have to preach some level of hope to get investors to buy into the economy. Nonetheless, the fundamentals of the economy speaks volume of what we finally find ourselves in. Inflation is on the high, interest is on the high. And this clearly shows that investors will be quick to exit the market in the short term. And that is what is contributing also to the current state of the cedi.
But of course, government, naturally continue to, state the case of COVID-19, its impact on the economy, also citing issues regarding what is happening externally. But also, some analysts are also making the point that, the best performing currencies were also equally hit by the pandemic. Therefore, what particular solution in terms of practicality must government, absorb to make sure that the situation is remedied and this trend disrupted?
Okay, so we can look at it in two fronts. In the short term, there is a speculative attack on the currency. And so the only way to deal with the short term is to, again, fall on Bank of Ghana to do the injections, pump the dollar into the system, so that in the short term, the excessive pressure on the currency can be under control. Then to the medium to long term, we then look at what we can do in terms of some of the structural things that we need to do. If we are importing a lot, we need to look at that importation so we can reduce the pressure on our currency. And then going forward, we can also look at what we can do as a country to consume more of the local things that we produce. But in the immediate short term, it's about BOG supporting the forex market with some more dollars, so that once we deal with the short term, we can then look at what we can do in the medium and the long term.
Let's look at the euro bonds, because one would want to wonder whether or not our failure to bring in proceeds from these bonds or not going onto the international market remains a stark concern to this situation.
Yeah, it is, but then again, at what rate are we going to contract these new bonds? Mind you, our fundamentals and our rating has been reviewed downwards by Fitch, Moody's, and S&P. So if you are going back to this market at this time, there will be funds available, but the funds available will cost you more. What do? Do you go in to contract these loans through the bonds at a higher rate, or you try to manage the situation the way it is? So these are some of the difficulties that I believe the managers of the economy are looking at, simply because our credit rating on the market now will not make it possible for us to contract these loans at the previous rates that we had them. It's going to be expensive. Expensive means that we have to pay more by way of interest, servicing. And that is what we are also trying to avoid currently. So we just have to hope and wait that the market will normalize a bit before we go onto the market to borrow.
Speaking about hope, you deal with the numbers. Looking at the crystal ball, where do you see the cedi's performance in the medium to long term ending this year, considering what has happened in the very first 2 months of this year?
Yeah, for now, we have crossed the 7 mark on the retail market. And if you look at the difference in the interbank rates and what the forex market is telling us, definitely we are going to end the year with the cedi at more than $7 cedis to $1 US. Again, between now and December is such a long time that if you're able to get the injections from BOG, if you're able to get some support locally in terms of cleaning our books as a country, from where we are sitting, we believe that the speculative attack on the currency will be reduced a bit. Even though the cedi will depreciate, it will not be as fast and as high as it has been in the past 2 months. We are not going to see a slow pace. But as for the 7 cedis to $1, we still believe that come the year end, the cedi will be trading at that to the US dollar.
Dr. Benjamin Amoah, grateful for your analysis. He is Executive Director of the Center for Economics and Inequality Studies. Well, we'll still stay with the cedi because its depreciation, as we have heard in this particular interview, is expected to hit hard on prices of goods and services, including fuel. As we enter March 2022, the Institute of Energy Security, IS, projects another rise in the price of liquefied petroleum gas, LPG, diesel, and petrol at the pump. The impending price increase has been largely influenced by the sharp depreciation of the cedi against the dollar. Other factors include the 3.33% increase in the price of Brent crude and the 2.71% rise in LPG price, as well as a 3.58% increase in the price of gas oil. All the international oil and fuel markets are also having reds in terms of their price hikes. Nana Moesu VII is Executive Director of the IAS, and he joins us via Zoom for more. We're grateful that you could join us. I know the IAS based its parameters, among other factors, on the global hike in crude, of course, the free fall of the Cedi, and even the Russia-Ukraine crisis. But tell us, what other signals government may be missing out on when it comes to rising fuel prices?
Well, Mr. Ite, good afternoon to you and to your viewers. But I think that you have recounted all the major determinants of what will drive fuel prices up come the next window, and that has been the value of the Cedi against the US dollar, then also prices from the international market with respect to fuel price and crude oil prices. One thing that can also change the dynamics is the levies and taxes on this fuel. If government reduce the taxes or the levies on the price build-up, it will change the direction of fuel in favor of consumers. If they decide to hike it for revenue purposes, then of course we're going to see an escalation in price beyond the forex exposure and the international price exposure.
You know, if you could recall, we've had a similar conversation, as this one, of course, related to global trends. Today we're having the Russia-Ukraine crisis, which of course has disrupted, global trends in terms of the finance and marketing of, economies world over. How can this, should it protract, help deepen the woes of fuel prices on the global market?
Well, the rift between Ukraine and Russia, as you've come to see, is coming with some sanctions against Russia. And if this sanction, is sustained, what is going to happen is that Russia will not be able to supply the world, and particularly Europe, the needed fuel, and that will batter on price because supply of these essential commodities will be squeezed. And note that Russia supplies more than 30% of the oil needs for Europeans, and is a major player in the world market in terms of oil supply. And beyond the sanction, if this war or battle between the two goes to hit any section of the logistics, let's say a pipeline, a key pipeline, then of course supply will be more squeezed. And we are also seeing today that when you go to the Suez Canal in Egypt, authorities there are planning to increase tariff at the canal. That will also batter on freight costs. So beyond the geopolitics, there are other indicators, including freight and logistics costs, that will also see price of international price go up. And note one thing: demand is still surging, and production, has been hampered because of low investment across the globe.
So what now? What now? Because we do know that transport fares have also increased by 15%. And of course, so many passengers, Ghanaians, are feeling the pinch in their pockets. How can government absorb consumers from this trend? You've stated removal of taxes and levies, but going beyond that, how can consumers be cushioned against this global trend?
Well, the fuel price surge comes along with inflationary pressures, like you've mentioned, transportation, food, cost of other services, and production. If you look at Kenya and Egypt, they didn't only suspend the stabilization levy, but they went deep into the stabilization fund to cushion consumers. So it won't be enough to suspend a levy or take away a tax. But then we can look at the price stabilization and recovery fund to cushion consumers. And also, because we are an oil exporting country, we are getting a windfall from our crude oil sale.
Exactly.
From $61.23 per barrel projected, we are seeing oil price on the world market surge beyond $95. You see a clear windfall of profit for government. Maybe government want to use that to compensate consumers by removing or suspending some of the taxes. This is for the short term, but in the long term, we must be able to manage that forex exposure as well as international price exposure using the boss and toll system to bring consumers relief in the long term.
And I'm Cedi the Seventh. Your analysis, as always, is highly appreciated. And he's the Executive Director of the Institute of Energy Security. You're still watching The Marketplace. Still to come in the bulletin, we're asking how prudent has government been with spending of COVID-19 funds? We'll find out from the Ghana Anti-Corruption Coalition. Do stay with us. You're welcome back. The Ghana Anti-Corruption Coalition has conducted a study on COVID-19 expenditure and policy implementation in 10 out of the 16 districts of the country. The research was done by a network of local civil society organizations with funding and technical support from the coalition. Bright Sewell is head of programs for the coalition and he joins us for more. Bright, grateful that you could join us. What was or were the findings of the study? Kindly unmute, Bright, so we could hear you proper.
Thank you very much. Good afternoon to you, sir, and good afternoon to all viewers of JoyNews. I guess the most surprising thing for us when we undertook this study was the fact that the local governments, that's the MMDAs in the country, and this is consistent across all the 10 that we work with on this particular study, that in 2020, in the midst of the pandemic, they did receive some amount of funding from government earmarked for COVID-19 expenditure, but no such money was released to them in 2021, that's the previous year, and this year in 2022. Now that came as a shock to us because in 2021, we had already drawn budget before the pandemic hit somewhere in March, and we were able to find money for the local governments to deal with the pandemic. In 2021, going to 2021, when we've come, or we had just had elections, we've had Christmas festivities, you would expect that this is the one time we were able to actually budget well, to be able to spend some money in 2021 to be able to combat COVID-19, the pandemic. But to receive no funding support at all from government, that was extremely surprising for us. Most of MDs mentioned that government asked them to use a portion of their DACF funding and also their internal generated funds to be able to deal with this. Now, the issue here is that the DACF is quite erratic in the sense that they don't always get it consistently. It doesn't always come on time. IGF for certain districts can be as low as below 10,000 Ghana cedis. So for us, this does not show whether a lot of seriousness as far as the tackling of COVID-19 is concerned from the MMDA's point of view and what government is support MMDA. Now, we are aware that, of course, we could have spent the money on a number of ministry departments and agencies and in many sectors, but the MMDA is a major spending area or major spending administrative structure.
Yeah, I want you to hold on your thoughts there. I want you to hold on your thoughts there, Brad, because yes, I'm quite interested in the figures. When you're saying that some monies were not, disbursed to most of these MMDAs, I mean, what specifically is the amount we're looking at, and what were the expectations for most of these districts and MMDAs? So
let's look at the year for which it was disbursed. In 2020, MMDAs received an average figure of around 236,000. I'm saying average because the amount might differ a little bit as we move from one district to another, but this is the average amount among the MMDAs that we monitored. And again, 20,000 of that came from the local government, which was meant to be for sanitation issues. 50,000 came from the DACF itself, money meant for sensitization activities. An amount of 166,000 thereabouts came from the DACF, what they call the responsible factor, which was meant also for water and a bit of other sanitary issues as well. Now, we understood that we were already in the pandemic year when it hit, so we were unlikely to be able to send the local governments quite some amount of funds to deal with it. But in 2021, none of the local governments reported received any money at all for any of these activities. That's the previous year. And that's why I'm saying this is very surprising, considering that That's the first time that we are actually entering a year where we know the pandemic exists, and therefore we have the opportunity to budget and be able to combat it properly. So how does it happen that we do not send the assemblies money? Now, again, if you take that figure I mentioned, and you try to sort of multiply it across the 260 districts, if you convert that in dollars, that's almost just about $10 million that we sent to the 260 MMDs to fight COVID in 2020. Like I said, 2021, no reported money sent to them. 2022, no reported money sent to them to deal with COVID. Their response to the government expected them to use their DACF funding and IGF funding to be able to combat COVID. And that's what we found extremely surprising, given the amounts of money the country had received from development partners, loans taken to be able to combat this particular pandemic. You wonder, again, what most people actually talk about, which areas we actually spend this money on.
This is quite intriguing, but of course, other civil society groups have recorded discrepancies in COVID-19 spending. Star Ghana, for example, raising red flags there. Did that come up in your study?
I think the issue for us mostly was that we went into looking for accountability on the money and the policy part. I think what was interesting for us is, again, the procurements that were done. Now, what we found was not really so much an issue of corruption than an issue, as you mentioned, your very earlier question, just for the break, prudent spending and how this was done. But we must also commend some of the MMDAs for certain very innovative ways of spending the COVID funds. And let me give one clear example. So in some MMDAs that took cognizance of the fact that a lot of people were out of work, when they gave, for example, contracts for the nose mask, they made sure they gave these contracts to the dressmakers associations, who were in turn instructed to ensure that all their members got a bit of the work to do, just to give them some work as well to be able to do. So if you look at the funding areas really and some of the methods used, it goes against what you call the competitive methods. But again, the heat of a pandemic, that can be understood to an extent. Ours was not really a forensic sort of investigation that could really unearth that level of spending. We're just trying to get an idea of the general spending areas, not provide a platform for them to account citizens to question some of the accounting and give us evidence of the areas where they said they had spent. Sure. And that is a mixed result. In some districts, yes, citizens were able to attest to the fact that they have seen the structures in place. They could feel where the assembly says they've spent. In other areas, there was a bit of a controversy. As the spending areas that were mentioned, people said they saw nothing there. So it's a bit of a mixed bag in that particular direction.
So what next, after this study?
That's a very good question. What we did was that in the very district we conducted the study, we actually held accountability platforms. And a lot of things came to light. Again, I'll give an example to answer your question. In some districts, for example, it came to light that the burial of COVID-19 corpses, which is something that the government is supposed to undertake. In some areas, money had been collected from the families to undertake this burial. It was the first time certain assemblies had heard of such an accusation. So, for instance, they are following up on this. They took the numbers of those who made the accusation and asked them to follow up to determine who they paid those monies to. We ourselves as a coalition, we are following up on this also next month, going back to the field. All the commitments that were made, all the data that Assembly said they'll provide in due time, we are following up again on it to ensure that indeed we are getting this data. Those who claim to have paid money that they should not have paid, we are following up again to see how that particular storage goes. But tomorrow, at the Kofi Annan Center of Excellence also, we'll be looking at the national picture where we bring the institutions that were pretty much our targets in this study to basically highlight some of the issues that came from the field, hoping to get a response from them. But also for the higher part, or the most important part, is what lessons have we learned from the spending so far? Because we are still in the pandemic period, and what can we change to be able to do a better job of handling this COVID-19 pandemic?
Bright, we're grateful for helping us with this information. Here's the head of programs at the Ghana Anti-Corruption Coalition, Ending the Marketplace, with me, Charles Ayete. For more news, please log on to myjoyonline.com. Many thanks for watching. Enjoy the rest of our programs.